Stamp duty land tax is a crucial aspect of property transactions in the United Kingdom. This series of videos aims to provide you with an in-depth understanding of SDLT, its historic context and the current thresholds, calculation methods, exemptions and its impact on property investment. SDLT has a rich history dating back to the 17th century when it was initially introduced as a stamp duty on land transactions. Since then it's morphed into stamp duty land tax. Over the years it has gone significant changes with the modern SDLT system taking shape in the early 2000s, I think it was 2003 in fact. Understanding this historical context is essential to grasp its current role in property transactions. SDLT is levied on the purchase of land and property exceeding a specific value threshold, and it's different for land and it's different for residential properties and commercial properties. In the UK, there are different thresholds for residential and non-residential properties. For residential properties, it's £250,000, no SDLT. For up to £250,000, no SDLT. £250,001 to 925,000, 5%. From 925 and a pound to 1.5 million, 10%. Over 1.5 million, 12%. And all of those have the additional 3% if it's a second or additional property. Non-residential properties such as say commercial buildings have their own thresholds and rates. These thresholds and rates are subject to change, so it's essential to refer to the government and HMRC's websites for the most up-to-date information. Calculating SDLT can be complex due to the progressive rate structure and the different exemptions and caveats and twists and turns it may have. It's not as simple as it appears, is the point I'm trying to make. To determine the SDLT payable on a property, one must consider the purchase price, the property type, i.e. residential or non-residential, and any applicable exemptions or reliefs. For residential properties, the SDLT calculated is a percentage of the purchase price within each threshold that I've just shared with you. For example, a property purchased for, let's say, £300,000 would have SDLT calculated at 5% on the portion exceeding £250,000. For example, a property purchased for, let's say, £300,000 would have SDLT applicable at 5% on the portion that exceeds £250,000 because that's the threshold, and if it's a second or additional property you'd pay the additional 3% too. Non-residential property calculations differ, often involving fixed rates for different bands of property values. Accurate calculation is crucial to avoid underpayment or overpayment. Certain transactions qualify for exemptions or reliefs from stamp duty land tax. In this series I will cover some of these for you. Now you might be thinking, what are some of those? Common examples include first time buyers relief, which reduces or eliminates SDLT when you're purchasing a property for the first time up to the value of £450,000. Then you've got multiple dwellings relief, MDR, which applies to purchase of multiple residential properties and the clause in the name, multiple dwellings. Additionally, SDLT may not apply to property transfers resulting from divorce, inheritance or gifts, but you need to check that every single situation because there are caveats. Each exemption or relief has a specific criteria and it's vital to understand them to optimize your tax liability and to reduce it. In this series, I will cover as much as I know about SDLT and especially the following: multiple dwellings relief, buying from probate, rescuing a chain, replacing your main home when you have additional properties, buying 6 or more properties in one transaction, exchanging your home with a developer when you buy a new one and give yours as a trade-in for want of a better expression, mixed use property, i.e. buying commercial property with residential uppers, buying a property with a commercial element, i.e. having BT or someone pay you for using your land and property, avoiding VAT on commercial property and reducing SDLT, buying a property that is uninhabitable, and SDLT on divorce, to mention but a few. So make sure you watch all the videos because everyone's going to be focused on one of the 11 topics or subtopics I've just shared with you. As you can see, SDLT plays a significant role in property investment choices. High SDLT costs can deter buyers, impact your cash flow, and it can impact supply and demand and how much you're willing to pay for a property. And investors should consider, in my view, SDLT liabilities when evaluating the potential return on investment and whether or not any exemptions or reliefs apply, and also having the cash flow available. Moreover, changes in SDLT policies like the temporary reduction in SDLT rates during the C word, i.e. COVID, can have a substantial impact on the property market. Understanding these dynamics is crucial for property investors and professionals. Since circumstances can change, it's essential to consult a tax specialist who understands SDLT, and there aren't that many of them in the country, just so you know, because they'll have all the latest updates, they'll understand the law, legislation, and will know how to apply the rules to different circumstances, and they'll also be aware of some of the reforms that may be taking place. SDLT is a significant consideration for property buyers, investors, and professionals. Therefore, understanding its historic context, thresholds, calculation methods, exemptions, reliefs, and its impact on property investing is essential for making informed choices in the property market. Staying up to date with SDLT policies and reforms is crucial to navigating this complex tax system that we currently have. So make sure you watch all the videos because I can assure you there are things in there which you won't know, which you want to know, because it's going to put more money into your pocket.